All right, so once again, just want to welcome everyone to the room and to this live intraday trade webinar on SB Trade Desk. So the reports that we've been covering, again, we get that little bit of a weaker batch of U.S. data just now. We've seen that the dollar's finally made it through this 11,400 barrier that we've been watching as near-term support. Could get a little bit more of a push to the downside, but the plays that we've been focused on, the Aussie, the Euro looks particularly interesting, and even the pound with what we got in overnight. The CPI numbers looks interesting at this point. So real quick, let's go over the setups. So here's sort of the setup that we've been looking at with the euro dollar. I left this up from last week. By the way, guys, just a quick housekeeping note. Just for clarification for the website, when you jump into the intraday charts page, this is just going to be an archive of all the latest setups that are posted here. The latest setup will be right here first for the intraday, and then once it gets off this list, it comes into this, which is a full compilation of all the reports. Jamie's swing trade section is the same way. So when you go into swing trades, all the latest swing trade updates will be right here, but for the full archive, you can click on this, and it'll take you through all of those reports. So we've been watching the euro dollar for some time, and the basic premise of where this thing is trading, let's start off with the daily chart, was that support bounce that we got right around 122.72, 122.65. This was a nice confluence region of an 88.6 retracement. This is from the advance off the lows that you made in 2011, was it? 2012. And then this is a 1618 from the decline off of those highs that you made in October. So the bounce there looks for a break of the monthly opening range to get this thing going. And remember, we were talking about this in yesterday's webinar on Daily FX, if you guys were there, with this 125 handle being the 764 retracement, the lows from October, and the monthly opening range high for December 1st. So this was the level or the barrier of entry to really get this thing going. The near-term structure of the advance also looked pretty good off of last week's advance. Okay, we ran to this 125 level. We came back 50% retracement exactly to the dot. Moved up again. As we opened up the week, if you were, again, in yesterday's webinar, we were talking about this trade. I think, Pooja, if you're in the room, there you are. I hope you took that break even on that rally there in the euro. I had a wonderful entry on that decline yesterday, but we just couldn't get into that 24 handle, right? And we were talking about that momentum signature. Well, it actually did finally break after yesterday's webinar to the upside. So I was thinking about you when I saw this, but the bottom line is this, guys. I mean, at this point, we're above 125. I'd be very cautious about trying to get too aggressive on the short side just yet. It's going to be a great entry, I think. Next topside target, I was just kind of looking through my report there. Next topside target that we were looking at for this, you made a 50%, again, the same 50%. This is from the decline off the highs that you made in October. You can see a nice pivot structure there as well. It was the exact target that we hit with this break above the 125 handle. So again, objectively, not what I think, but objectively, above 125, if we're sticking with the opening range strategy and we're sticking with this near-term outlook, you really got to stay cautious above the shorts above 125. I think you do get a stretch probably higher here, just a little bit into the 126 handle. I know Jamie's looking at, 125.20 was the one target that he was looking at. We flew past that one. I was looking at that too, is the 1618 here. But he's looking at 26.15 for the next target, and that's the exact 100% of the same move we're both looking at there. All right, so it looks pretty good. Again, the momentum signature, very constructive on the pullback since the start of the week. There's a 40 hold, that's the 60 break. Momentum signature at this point turns more positive. Pooja says, yeah, I was doubting it yesterday, got out in time. Awesome, awesome. I mean, your execution on the entry was amazing. So I just didn't want to see you watch all that sort of evaporate on this rally here, but good job, Pooja. Well done. So above 125, again, we'll look to see if we can get some top triggers. Keep in mind, and this is something I just want to say to you guys as we head into the end of the year, liquidity conditions are starting to tighten up. You're seeing a lot of that turmoil. I don't know if you guys have been, I'm sure you guys have been watching what's been going on in Russia. They boosted interest rates. It's 17%. You still saw a 14% drop in equity markets on their side today. Obviously, the ruble story is something that's, at all-time records now. So there is uncertainty. There is a lot of turmoil out there. And with liquidity conditions this thin, especially into the end of the year, you can see some major swings. So for near-term traders like us, it's the time to be a little bit more nimble on your toes. That being said, the FOMC policy decision tomorrow is likely going to be the biggest mover for the dollar crosses across the board. The real focus heading into tomorrow's print, guys, is going to be whether we see them change that tone with regards to the extended period as pertains to rates. If they cite a little bit more concerns about the global conditions that are happening, if they cite concerns about the fall that we've seen in crude prices or anything to this degree, you want to be very cautious because that could be them pushing out interest rate expectations, which could give this dollar pullback a little more oomph to the downside. That being said, we're getting strong non-farm payroll prints consecutively. We're averaging above 200,000 at this point. And the metrics have been rather good. So if they come out with a little bit more upbeat assessment, people start to move those interest rate expectations forward in 2015, that could be supportive, at least hold the floor here for the dollar in near term. So we'll have to see the devil's in the details. Again, we'll be getting those quarterly projections. We'll be getting the presser with Janet Yellen. So certainly tomorrow is going to be a lot of event risk for the greenback. Any questions on the euro? So I'm still looking for long exposure while above 125. This is the only thing that would invalidate the near-term bias to the upside heading into the end of the week. Would be a break back below 125. That being said, still looks good. Still looks good. And this is a wider range, guys, pitchfork that I showed the guys in Daily FX yesterday. Okay, there was that medium line buy sector. We talked about the fact that this actually coincides with this right ahead of FOMC, or right after FOMC, I guess, on Thursday. A little preemptive break here to the upside. You could come back and check this same level of support before we move off, but the broader term, 25, is still going to be our invalidation level for the longs. All right. Moving right along. Okay. So, the Aussie dollar. So this is another one. Actually, on Daily FX, I put out a piece on Aussie yen. I linked it for you down here yesterday, really focusing on that 96.60, 96.50 region. That thing broke in overnight, and he got a quick snap into two subsequent scalp targets. So we'll go over Aussie yen in a moment. Obviously, the yen story really propagating that even more so. But the Aussie story, which was a great hedge against that trade, actually worked out beautifully. So the major focus of this setup yesterday, guys, was that the 81.96, 82 area was really big for the Aussie. I mean, we're talking about a 1618 extension from the decline off the October high. It was now the opening range low. So again, when the weekly opening range takes place right above a major support barrier, these are the setups that I will tend to favor the most. So you had this descending channel formation or descending pitchfork formation, and you have a very clean opening range between 82.60 and the 82 handle. So you look for a topside break. You really need to clear this trend line to get the go. You're looking for a rally into 83.40, 83.50 in such a scenario. Or if this thing breaks 82, sayonara. It's going to be a quick lash because, again, there's a lot of downside pressure here, and this is a pretty big support structure and a 1618 off the highs. So what happened with the Aussie? Here's what it looks like today. Okay, so that same setup gave you a beautiful, someone's messing with my lines here, gave you a beautiful trigger to the upside, an overnight trade. Oops. So there's your RSI trigger. Okay. You had a really nice risk to reward on that break too because you had that key 81, 96, 82 barrier of support, initial topside targets. Again, we're going to be that, I believe this was a 786 or 50, 200% extension off the highs from November, or channel resistance. And again, remember guys, this near term is the bearish invalidation level. So you can feel free to play the range ahead of the break of the weekly opening range. But the long story short is, if you are taking this long position, you're all out until we break out of the weekly opening range. Until that range breaks, all the trade conditions are within those extremes. So longs into that 200% extension at 82.63 worked perfectly. Again, momentum holding at 60, so you can't get the breakout yet, But again, the focus still comes on this descending upper median line parallel. Okay, this one's been holding for quite some time, guys. So if you do get that break, initial target's 82.87 and then 83.40, 83.50. 82 being still the bullish invalidation level. Questions on the Aussie setup. The range is tight. Again, we need that conviction break above 82.60. Till then, I'd still look to buy against 82 on every opportunity I can get. Now, again, this is just a sort of rebound play here, guys. The broader downside bias remains. Even from a momentum signature, it still remains. But if you look at this thing on a daily chart, you know, this 1618 does warrant some caution here for some sort of snapback. A break below this, and there was really not much in the way of major key support until like 81, what is that, 81.20 about. And that would complete a 1618 off the highs from 2011, a little bit further back. Any questions on the Aussie setup? So that one is still in play as well against 82. Okay, last but not least, the setups I want to follow, guys, and then feel free to throw out your pairs, any trades that you guys are looking at. I'll be more than happy to jump into that as well. But here's what yesterday's Aussie Yen piece looks like. Now, this one was a little bit bigger of a support structure because you had the confluence of the lower median line parallel, okay, a 1618 extension off the highs, and 9640. Oh, is that huge inflection range? Sorry about that. I just have to remind myself. But you had this big area of support. Momentum was still bearish heading into the start of the week. You saw that 60 hold right in RSI, and the reversal take you sub 30 again, keeps the bias to the downside. However, because of the paramount level, because of the importance, technical significance of this level, we were looking to play either a rebound, the break of the weekly opening range high. We were looking to play targets into 98.60, 99.50, or if you see the downside break, you're looking for a 96 handle. Subsequent targets to the downside were listed for you there, but that was sort of the play. It broke right through. Okay, you got a pretty nice bouncing overnight, actually right before it sailed through that support, but nonetheless, there is the break. So again, you have the lower median line parallel for that formation. You had the 1618 extension from the decline off the November highs. On a broader basis, that 96.50 level is pretty huge. Here's what it looks like on the daily chart. Okay, 96.50 right here. You're looking at the April highs. You're looking at the June, July highs right here on the crossover. You're looking at the pivot break from September. Okay, that all coincided right here. So the break taking out two of the subsequent downside targets here in the Aussie yen. The first one was right here at 96. Second one was 95.40. It's exactly where you found some support here. So heading to the end of the week, again, sub 96.50, you want to be looking for the short side of the trade. You're getting some divergence here in momentum, not something I'm going to spend or give too much or lend too much assistance to just because it's an oversold condition. So again, when you get these momentum divergences sub 30 or above 70, these are typically your weakest signals. But the broader trend here remains weighted to the downside near term below 96.60. Okay, again, another really clean opening range break. You don't get them quite these clean quite this often this late in the year, so we'll take it where we can get it. Question from Eileen. Great to see you. It says, good morning, Michael. Sorry I'm late, but the party, but happy to see you. Cheers, Eileen. Always a pleasure. Gert saying Aussie Kiwi testing multi-year lows again with possible upside on the Aussie, looking long, assuming the low holds. Gert, we can take a look at Aussie Key for sure. So the Aussie Key was a very similar scenario that we were looking here for the Aussie Yen a couple weeks back. If you remember on SB, we put out a report looking for a rebound. That level actually gave out, and this thing went right through the floor. So here's what Aussie Kiwi looks like on the daily, Gert. Okay, So here's sort of the broader picture since 2007 for the Aussie key. And basically, you made it past that 2008 low, and there was a channel support here, which was working as a nice pivot. That's sort of holding the lows right now. I'm not sure if that's the trend line that you're looking for, Gert, but this was a clean break of the monthly opening range. Okay, and remember, we started the month trading the long side against 107.60. And you actually got a lot of nice plays for it. We were looking for an inevitable run up into 109, never happened. And in fact, once we put this reversal day again last week, the subsequent day break and close sub the opening range low for the month, sub the 786 retracement, took you right back below this trend line from the yearly low. That puts a bearish, tone on this into the end of the month. So, Gert, you could get a bounce here. I do have 105.30 as those stretch lows that you made for March. But for me, personally, I'm not going to look to long this or even try to play the long side while momentum is an oversold condition. That's one thing. And B, the monthly opening range broke to the downside. Today broke the weekly opening range to the downside. As long as you're below that S1, I'm not really going to get too aggressive on trying to play the long. I mean, you could get a hold here. But with what the Aussie is doing, you're watching Aussie dollar hold support, but Aussie yen obviously broke through. Yen strength to be expected. Long story short, it doesn't give me too much conviction on what's going on here to try to play the long just yet. I would actually be a little bit more or would favor a little more, Gert, if you get back into like 105. Okay, the actual stretch low for the year, but more importantly, that S2 monthly pivot. And if that's accompanied with some divergence with a break to the upside, that would be sort of a trigger I would be interested in playing. At this point, this trend line break and break of confluence with the monthly opening range is pretty big. And Aussie Kiwi is one of those that where you tend to get those opening range breaks. They tend to work out really well right into the end of the month. Here's the opening range break for July. We closed at the highs. Here was the opening range break for August. We closed right at the highs. September was a wash. It was a topping process. October was a wash. Opening range break for November, you closed at the lows. You see what I'm saying? So I'm just a little kind of cautious about trying to play the long side. Intraday, I'm sure there's some opportunity. Here's what it looks like. So I've been watching this descending pitchfork formation. I know we've been kind of messy on both sides, so I'm not going to stress it. If you take the parallels, and again, this is something that you'll see a lot in Jamie's webinars as well, guys. A big part of our analysis is really this slope analysis. And if you take a parallel right off that high and right off that low, it gives you a little bit more guidance of where you would want to start looking for the long side. For me, it's not right here. Not yet. I would need to see a little bit more of a profound shift in the momentum signature before I try to play this one on the long side. So remember, this is where we published that report, start of the month, looking for the longs against 107.46. And again, you got a couple of opportunities. That's a decisive break of the monthly opening range. I'm not going to look to fight that unless there's a little bit more profound reversal. Gert says, cheers, Mike. Waiting for a few tests of the low and holds, considering a long or leave it. I'm with you on that. If it tests the low and you get some nice rebounds, and especially if we start to see the Kiwi turn over, Gert, I'm all over this. That being said, it's tough. It's tough to really try to warrant a long Aussie Kiwi exposure, especially with everything that's going on too and risk really selling off. I don't know. Not my cup of tea. We'll keep it on the radar and the watch list, but I think you got better shots in the Aussie yen and even the Aussie dollar here. Chintan, great to see you. Says, Mike, cable catch our attention too as it comes into that we are tracing to short it since past a couple of days. Cable catch our attention too as it comes into that we are tracing to short it since past couple of days. Chintan, I'm not sure I understand your question, but here's what I'm looking at with the pound. So this is what's interesting to me. The actual overnight data wasn't all that good. All right? You got CPI prints out of the UK, guys. Sorry about that. Let me bring up the terminal real quick. You got that CPI print in overnight trade, weaker than expected, right? The core, we were looking for a print of 1.5, came in at 1.2. So here's the data from overnight trade. Now, what's interesting is that you didn't see the pound really take that big of a hit. In fact, today's move does take you through the monthly opening range high. Here's a December open, and it was right there. Now, we would need to close above this region, and I talked to you guys yesterday in the webinar about the 5820, 58 region is a huge region of resistance that we'd want to get through. But I'm not ready to turn around on this yet. Chintan, because of what we're seeing in the dollar and because of the resilience this thing is having despite that, data print and overnight trade, I'm not quite sure this thing's ready to turn over just yet. You know what I mean? So, by the way, here's a relative performance, just so you guys get a picture of what the dollar is doing in general. Here's the general performance against the dollar. So you can see that the dollar is weaker against all its major counterparts today. Biggest performer, obviously, is the yen. We'll take a look at that in a moment. But the British pound down 0.72%. Or the dollar down 0.72% versus the British pound. Right? So the near-term structure for me, and again, this is our scalp webinar, so the near-term structure for me is really what's been clearer than anything. It's funny because I actually tapped on Jamie's shoulder yesterday and I showed him this pitchfork. Again, it's speculative, guys, until we confirm it. And how do we confirm it? We see price move around it. So yesterday in the webinar on Daily FX, you might have seen it in a dashed line like this. And that's how I like to organize my setups. Until I have some verification that this is the proper slope, I don't want to stress it. Well, I think we got verification, guys. There's the high, catching the highs last week. There's the low that we caught in the opening range for the week in overnight trade. Again, testing that low right through the opening range high for the week and objectively above 57.45, 57.50. You really want to be constructive. Now, it just so happens that you have this major trendline resistance that everyone's been watching since the start of the year that broke. We tested its support, moved through. Once we get through this buy sector, that's when I think you start to see this thing accelerate. Now, again, we're not talking about a major trend reversal. We're not talking about, 165 again. But near term, this does risk a little bit more of a break higher. Initial topside targets are 58.73, and then right above 59 into 59.30, 59.15. Any questions on the pound, Chintan? So that's sort of what I'm looking at. He says, yes, that's exactly from which, is the 50% exactly from which you draw the Andrews pitchfork line? So on this one, you need to be a little bit more creative, to be honest with you. Remember, the thing that you want to stress with pitchfork analysis or trendline analysis, slope analysis, is the actual slope. That's the most important thing. And in fact, if you take a 50%, typically I'll tell you guys when you're trying to do the shift formation to take 50% of the advance, that first leg up. Oops. On this one, if you take 50% or if you take the fib of the leg down, the 38.2 is actually where I found this slope. Okay? So sometimes you got to be a little bit more creative with those slope analysis, guys. You don't want to be too rigid. For me, typically, I like to have every reference point mean something. But on something like this, which is why I drew in a dashed line yesterday, if the market is clearly speaking, don't even stress the pitchfork formation. You know what I mean? So, for example, to put things in layman's terms, Chintan, I don't even need this pitchfork, right? I could do the same type of thing with just basic parallels. And if you take these parallels and they're correct, you should see a lot more confluence around them. Sorry, guys, my computer's a little lagged here. We're back at the FXCM office. But you can see what I'm talking about, right? So don't stress as much the reference points as much as you are stressing, where the market's slope or what the proper slope is of that advance. So that's all I'll say on that. But that's sort of what I'm looking at with the pound. And I do think on this advance, now you want to take into consideration just an extension off the low here to get some topside objectives. Topside break looks for 58.15. Does that make sense? Chintan says, oh, okay, so we can take the 38.2, 56.18, depends on the present price action. Is that right? Correct, Chintan. The first thing I like to do is take the 50 because that's the generic shift formation, which just pairs half of the first advance. But then, if the slope doesn't match, go ahead and play with that reference point. Take it to the 38.2, take it to the 6.18, and a lot of times you'll find that you'll find an accurate slope at that point. So I hope that helps. Chintan says, yes, sir. Cool, thanks. You appreciate it. Appreciate that. Dale, great to see you in the room, says, is there a good place to jump into the euro dollar to the upside today? Thanks. So we went over the euro dollar a minute ago. We'll go back to that in a moment, Dale. But just before we do, any questions on the pound? Watch 57.22, 57.22. I'm sorry, 57.72, 57.69. That confluence of, again, a 6786 extension off the low from last week and a 236. This is off the decline from the November highs, if I'm not mistaken. I'm sorry, the September highs. So that'd be the first area of break there. And then obviously once we get through that median, if we get through this is where you can see some accelerated gains. 59, 58, 98 is sort of where I'd be looking. Actually, we'll put that to 59 level for longer term objectives if we break through. But, and this is the one thing I do want to say, guys, on this, with this break of the weekly and monthly opening range, we need to see this close above this region to really validate that. Okay? My suspicion is that we'll get it, but we do need to see that close above, before you start to get too aggressive on the long side. That being said, as long as we stay within the confines of this formation, we'll look to favor the upside in the pound. Questions? All right. And Jay Jackson, great to see you in the room, says, morning all. Mike, CAD seems to be trading against all currencies, played versus the euro in the euro session. Would you look at euro CAD? Sure can, man. Sure can. So watch again the pound, guys, heading into that initial resistance, 57.72, 57.70. We'll see if we can get that break of the median line. Looking at euro CAD for my man Jay. Looks like this. That looks really interesting, actually. Let's see what the scalp looks like. Okay, bear with me just a moment, Jay. Obviously, I haven't updated this chart in some time here. It's my first time looking at it in a while, so just give me a couple seconds. Let's see what we can slap together here. Is the opening range for the week. One, 2, 2, 6, 1, 8. Nice pivot break there. Actually, that's a really nice break of the initial weekly opening range. See this, guys? This is textbook. You push into a new high right into the open of Asia Pac. You make a new low in Europe. This is European trade. You check the highs again in the U.S. You break through. Check the support, move off. That's a classic opening range, weekly opening range play. At this point, you are looking like you might see some exhaustion, but there's a couple of triggers I'd look for before that assumption is made. Let me clean this up a little bit for you guys. That's done. That's done. I'm going to leave that 2618. Ooh. Don't need that. We'll leave that one. 786. Don't need that. 38. All right. So here's what I'd be looking at near term. Actually, I'd move this highlighted region right down there. That's going to be your key support. You're looking at the opening range low, confluence with 100% extension off the November low, and also a longer dated, I can't remember what that was, 1618. This is off the highs that you made back in March 2014. So pretty nice pivot level there as well. So that's going to be your near-term key support. Obviously, you stay constructive above that 2618, 144.73. It's the opening range high and that 2618. You can see this pivot line here I've just left. This is a nice slope analysis line too. As you can see, 1, 2, back is resistance, 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 break, instant support. Give us some conviction on that slope. Let's see if we can get a nice pitchfork on this. I'll probably be a little bit more accurate of a slope, guys. 1, 2, break, support. And that does put resistance pretty close by. Okay. And near-term resistance, 146.25. Yeah. So here's what I'll say on this one, Jay, for you on the EuroCAD. You know, it's been a pretty strong rally with this push higher, but the one thing I'm concerned about is where dollar CAD topped out. And in fact, that's a major key resistance target I've been looking at. So if CAD weakness is to start to wane, and that could my point is that could propagate this even higher unless we hold that resistance in dollar CAD, which means that you could see this thing sort of stall out here. So here's what the dollar CAD setup, the dollar CAD setup looks like as we head into FOMC tomorrow. The major resistance that we were looking at was way up here. This is a confluence, guys, really nice confluence region of a 618 retracement from the decline off the 2009 highs. And even more important and more interesting is also an exact 1618 extension from the decline off the lows that we made in 2011. It's your post-crisis lows. So if you take the extension off that rally into the 2012 low, 1618, 1655, 618 retracement of the decline, 1666. Major resistance. So on that premise, I think CAD weakness can start to wane here. And if the CAD shows some strength, that could be a little bit more of a detriment to the upside of EuroCAD. That's all I'm saying. So I'll be watching this one with great interest. If this thing blasts through 1660 and that yen and that weak CAD story persists, especially with the rebound that you're seeing in Euro, sure, I think you could probably play that side or continue to favor the upside. Again, remember, objectively, this stays constructive above 44.70. So any long exposure that you can get towards that region, if you want to put a stop against that bisector or that median line to the downside, might be another entry to the upside that would work pretty well. But at this point, you know, you're too close to resistance for me to start getting, or for me to continue liking the upside from this point. I'd be looking for a pullback towards the 145 handle. You also have a trigger here as well. If that gives out, you actually might see this thing spill a little bit lower. Does that help, Jay, on EuroCAD here? Not a bad setup. Thanks for bringing this to my attention. I'm actually really interested in this. Jay says, okay, love to watch you put together these charts. Hey, man, that's what you're here for. That's what I'm here for. It's what I love to do. So cheers, mate. It's my pleasure. I'm humbled by your comments, man. So, guys, feel free if there are any other questions or trade setups that you want to review. We still have some time in the webinar. Chintan wants to also look at Euro Yen and Dollar Yen. Both broke the December opening range low early in the week any comments on that? Sure, we can comment on anything you want. Here is my man, the euro yen. So the euro yen on the daily looks quite interesting because as we broke down, we were looking for support at this former upper median line parallel. It offered support after the break that we saw in November. It offered support on this pullback right here, and you're absolutely right. This move yesterday took us back below that same slope trend line, and this move today takes us not only through the opening range low for the month, but also through this major support region between 146 and 145.70. This is the 2013 high. This is a 236 retracement from the advance off of the yearly low. So this retracement takes into account the entire yearly range. And add to that, you also had the monthly pivot, which was right in there. So for me, as close below 145.67 here near term, you look lower still. Initial targets 145.50, 143.80. That'd be complete a 38.2 retracement and also be a nice tag of those highs that you made back in March. So, I mean, yeah, what could we say? If you guys recall, actually, where was that euro yen set up? I'm sure we had it here. Euro yen correction. So since the 11th, if you guys recall, here's the link for this one, by the way, if you need to review this setup again. But since the 24th of last month, we were talking about this being a major area of resistance. Why? Again, it's not just, well, blatantly, basically, it was the ascending pitchfork or the median line parallel off the lows that we saw. This goes all the way back, by the way, to the lows from April of last year, right? So that came right into the resistance. We played the pullback. It found a basic support right in that same region that we were talking about. And then when we broke the opening range to the upside towards the end of November, you know, we saw another test of those highs. And again, here's the turnaround. So we were a little preemptive last month on trying to call the correction. I think this is getting a little bit more comfortable with me saying that. You also had a momentum break here to accompany that break yesterday below the opening range. And watch today's close. If it closed below 145.67, I think you continue to favor selling rallies well below 146.40, 146.30, which is the opening range low for the month. It also looks like a head and shoulders on the 4-hour, says Chintan. Well, first let me look what the 30-minute looks like. Long charts, euro yen, 30-minute. Okay, let's put this one together as well here. You can see I haven't updated this one either. Nice 50% retracement of that first leg down. It'd be interesting to see what the extension off that high looks like. So right now we are at support. So this is another one that we put together yesterday in the webinar. Here was the high from the November advance. And the pitchfork, very basic pitchfork on this one. Look at that median line, catching the low almost to the pip today, guys. So a couple more things I can do to give myself some more reference on where we are. All right. So near-term key resistance 144.86 into 145. 145. This is the exact region where we bottomed into earlier today. So in fact, the low for the week so far, 144.94. We probed right into this. So this is actually near-term support. I'd be watching this structure here, Chintan, for the euro yen. A downside break, you have the 2013 high day close, which comes in right at 144.50, 144.49. And then 38.2 takes you down into 143.40 and change. I'd be looking at 144 as a soft target here, by the way. Here's the weekly open. This trend line is not. And again, so there's the same pitchfork we're looking at on the daily chart. Break, support, support. There's the breakdown below the monthly opening range, below the weekly opening range. And in fact, actually, guys, that 38.2, that would have been a good opening range for the week break as well. So here's the Sunday open. You push into the high, you make a low. You check the highs. You're waiting for either a break above the high to be bullish against this low, or you're waiting for a break of this low to be bearish against this high. You got the break of the low, looking to sell rallies well below 146.95. Now again, coming into the lows here, you have some divergence in price. Price making a deeper low, the oscillator making a higher low. So the propensity for a kickback here, at least a little bit of a recovery stands. I'd still be looking to sell that rally below 146.95, 147 right here. Does that make sense? Chintan, does that help? The 4-hour structure you're looking at that looks like a head and shoulders. Let's see what you're looking at here. Could be. It's very lopsided. And the whole point of head and shoulders, guys, just, people will tend to throw that comment out way too often. And I'm not just picking on you, I'm just saying in general. The whole point of it is it gives you a measured objective run. So if this is a head and shoulders, oops, did it backwards. Oh, I'm sorry about that, guys. A little bit of a lag here. Like so. So if we do that, look where that measured run goes, though. So if this is going to be head and shoulders, and we want to measure that measured objective run, look where the support comes in. 41.30 into 141.60, which is going to be the exact 50% of the rally. So either way, I don't stress those things until you get more of a formation break. And right now, if that is a formation break, then you should be looking to be or look below 145 to hold a short position. I happen to think that this is a little bit more of a near-term support, so you could see a little bit of a rebound. And I'd be looking for that break below 145, 144.80 for that run. Looks pretty good, though. Looks pretty good. As long as you stay within the confines of this formation, you want to look to sell rallies. Break below this buy sector or the median lines, likely to see some accelerated, losses here for the euro yen. But the levels look pretty good. Guys, as a quick disclaimer, again, remember that anytime during the webinars, if you see any of the charts here that you like or something you want to keep on hand for your own reference, do feel free to click on the camera button here on the top of the GoToWebinar screen. You can take a snapshot of any of the screens that you see here. Chintan, hope that helps. Says, okay, cheers, Mike. Yes, sir. That's what I'm watching for if the yen catches a spark, possibly. Yeah, I hear you. It's interesting because not everyone got the reaction that they thought they would have gotten, right, on that Abe vote, but we'll see. We'll see. Nikki says, hey, Mike, my apologies if you and Jamie have covered this previously, but can you just can I just ask a question regarding the operational side of Trade Desk? Sure. Before the launch of SB, I understood that you may be doing trade calls on the intraday basis with Jamie doing swing trades. I'm aware of your posts of intraday charts, but just wondering if you're looking to take it a stage further. So, Nikki, here's the deal. I'll be putting out way more material as we go into next year. I'm actually still, running full-time with Daily FX as well. We'll be looking to gear that. We'll take a much lighter load in Daily FX starting next year, myself and Jamie. So there'll be a lot more posts. As far as a trade-by-trade type of post, Nikki, for the intradays, that's going to be very difficult. We talked about the logistics of it for a while. I'm so quick on these intraday trades, guys, that even the initial setup, Nikki, if you remember when you first jump into the trade intraday page, I had those arrows there that you could tell what direction I'm trading. The problem with it is it's too misleading because the intraday bias can change so many times, Nikki, that logistically for me to go and try to tweet every single position I'm taking during the day, it affects my trading, which is the biggest problem, but it also makes it very difficult for people to try to follow along. So the best thing I can do is I'm going to highlight these charts. I'll tell you the general bias. If there is an obvious trigger that has time, I'm sure I'll be able to throw out a couple of trades out there on the SB Squawk for the intraday. But as far as a trade by trade on every single one of the scalps, it's just logistically, it's not feasible. So Nikki, I hope that answers your question. Again, we will be increasing a lot more the volume of the SB Squawk posts as well as these webinars. Again, we'll be going full mode at the start of the year with daily webinars on SB Trade. But hope that answers your question as far as the intraday trades are concerned. Okay, so a couple more things we just want to cover real quick before the FOMC tomorrow. Obviously, guys, the next webinar on SB Trade Desk is going to be on Thursday. And Jamie Setley will be going over the intraday market timing webinar then. But let's go over some of these dollar crosses ahead of FOMC. Okay, so here, my friends, is what the abomination looks like. Nikki's saying, so are the current trade calls a result of a collaboration between you and Jamie just now, or just Jamie? Just trying to get a handle on how things work. That's all. Smiley face. No worries, Nikki. You can feel free to ask any questions you want here. You're in the right place. Listen, so the calls that you see on the swing trade page, these are going to be mostly the setups that Jamie's looking at. Everything we do, Nikki, is to some degree a collaboration. We sit right next to each other. We're always looking at the same charts. We're throwing around trade IDs all throughout the course of the day. Even on his intraday trade, even on his swing trades, if I'm going to write a scalp, even if my bias is against him on the near term, we try to make it so that they line up pretty well. So you guys are well aware of where we're looking at on the broader scheme. So you can take everything as more of a collaborative effort for sure, Nikki. On the intraday, a lot of times I'll take positions against the trades that the swings are looking at. Because if the swing trade's looking for an entry in dollar yen down here, I'm a scalper. I'm more liable to play that short into that entry level and then look to play the long. So let's just say this: you won't see too often a trade setup where we're both against each other on the side of the trade, unless it's on an intraday basis. So all the swing trades, more or less, we're on the same. We're on the same page with that one. The intraday trades sometimes can be against those swing trade positions. Does that make sense, Nikki? I hope that answers your question. Nonetheless, the dollar yen. Chintan saying, who's going to join YouTube Masters, or is it just YouTube who will handle the SB in 2015? Well, we're bringing on, Nikki, you're more than welcome. She says, okay, thanks. Chintan, we're bringing on the addition of IDO Search next year. It's going to be an additional subscription, guys, because, again, this is a third party. It's not something that me and Jamie created by any means, but it is a huge resources. Institutional banks have been buying IDO research for literally tens of thousands of dollars on the year. So we've been able to negotiate, a setup with them, or we'll be able to get a version of their search engine that we can use on our site. Again, I think preliminarily they're looking at a $150 additional cost price tag on a monthly basis, which is still a huge bargain compared to the prices that they're charging these institutions. But it is a phenomenal piece of software, guys. I've gotten the opportunity to work with it a lot over the last year. The person who was instrumental in the creation of that software, genius mind. He's a good friend of Jamie's, and it makes some interesting calls, I'll tell you that much. And it allows you to search back in history anytime you've seen a given formation, a given pattern, and it'll tell you not only the percentage up and the percentage down subsequent to this pattern, but also the percent gain and percent loss on those moves, or the ratio. So it for sure on intraday trading, what I'm going to be looking at it is those projections on a daily basis of how they change. And a lot of times that can help us add confidence to even our near-term trading. So that's something that we'll be looking to bring on. Looking at right now, the date looks like mid-January for IDO to go live, but it's an awesome. I can't wait to work with that, guys. It's going to be interesting. We'll have webinars on that and reports on that as well. But good question, Chintan. Nikki, you're more than welcome. He says that's awesome. And to the dollar yen. You guys know where I stand on this. I'm not really keen on scalping the dollar yen. Jamie's been tearing it up. He's really been intraday trading this one actually really well. I've kind of been very shy of the dollar yen in general terms. I think this is a trade where I'd much be rather involved in the longer term positioning than necessarily trying to play the intraday. That being said, it actually has pretty clean levels. So there's a basic channel off the highs. Also note that this bisector median line has been working very well. We just drew this off the high on the first week there. You can see the support, break, now instant resistance. And let's see if we can put together a position here for Sorry guys, just bear with me. I want to see what this looks like real quick. Okay, I'm not going to stress this pitchfork because we basically have that support covered with that channel support, but I do want to see what this bisector looks like. Could be in play here. So some support, a little dribble underneath there, but then support again, support in the break where you see the acceleration. That's a level that you want to pay attention to. So near term, I would say below that median line right there, you don't even need this slope line anymore. Below that median line right there, you want to be cautious about trying to take any long exposure. It looked to me like this break right here was the weekly opening range break, and this was the move that we made in Asia Pac last night essentially. So below 1760, I would be cautious about trying to get any type of long positioning on this. In fact, this thing could probably rally right back into trendline resistance. Bet you there'll be a nice confluence up here. Watch this. Yeah. So initial 117.95, which would be the opening range low for the week, and a 38.2, and that coincides with channel resistance. Wow, heading right into the FOMC tomorrow. So that's something we'll be looking at very, very carefully. But as long as you stay below this region, I'd be looking to sell rallies. You might get a stretch into 118 or so to check this pitchfork I was working with into the start of this week. And that takes you a little bit higher, maybe into 118.20 or so. Looks like that's a trigger break. Could be checking this as support. Then you move through 50. The breakthrough 40 here would be a topside trigger. You'd look for a move into 1680, 117, this region. So this is actually a decent setup, guys, for intraday levels. Here would be the. Hey, Eileen, are you still there? Just want to make sure I didn't lose sound. I was quiet for a second working on these charts, but here would be the region of which you would start to play a little bit more of a corrective approach into like 118, where you'd look to short it again. As long as you stay below 116.80, 117, you're looking lower in this thing. Does that make sense? Chintan here on dollar yen. All right. Chintan says yes. All right, man. So we will see. On a downside break, by the way, I think dollar yen has more room if we do see that move. 115.14 is the exact 100% extension from the decline. So this is sort of where it would be the objective target. That hits channel support, again, heading into FOMC tomorrow. Well, heading into the U.S. Open. So it might be on our radar as well, but it's the abomination. Aline says, okay, I have sound great. All right, guys, we're running into the end of the hour here. If you have any last-minute questions or trade setups, please feel free to throw them out before we close the doors here. Sterling still respecting that 157.70, 157.73, guys. So watch that region. Again, the opening range high as support, and that 786.236 confluence as near-term resistance. If this is the slope and correct slope we're working with, like I said, 158.15 hits right after FOMC tomorrow into Thursday, right around 158.15. What's the schedule this week for your seminars, Eileen? So this week this is to be the last one that we'll do on daily on SB Trade Desk for the week from myself. Jamie's will be on Thursday. I'll be on Daily FX tomorrow and Thursday, guys, and then we'll be off of Daily FX actually for a week. It'll be a while, take the holiday off, and we'll be updating just purely SB post that. Nikki says, any thoughts on the open trade, Mike? So here's what the equity markets look like into the open. Okay, so you're about a couple minutes into open of U.S. trade. We're seeing some red across the board. So the Dow's down 0.3%, S&P down 0.63%. Listen, Europe had a rough day across the board pretty much, but you also had the Nikkei, which was down another 2% in overnight trade. Nikkei futures ahead of the open were down 4% yesterday at one point. So certainly risk assets in general seem to be turning over into the open of the trade of the session. This is for Nikki. I'm still going to be looking for the open SB trade, she says. Oh, I'm sorry. I thought you were looking for Okay, so I thought you were talking about the general conditions that we're seeing for the open. I'm really focused on the sterling because I think some of the other sterling crosses are very interesting, and if this pops 57.70, I'd actually really like to be in some of those other crosses. Sterling Oz being a very, very interesting one. I think someone threw out a question. Oh, Nikki, there you go. Sterling Oz right here. Looks like this. So essentially, we started the focus last week was a scalp report citing a risk to the topside bias below 190. We spent 3 days trying to break through that. We couldn't close through it until Friday of last week, and we finally made that close above 190.11 into 190, which was an 88.6 off the highs of the year. It was a 2014 high day close. There's a 786 extension off the low, as well as a trend line or upper median line parallel. We finally made it through that, and we closed above it. At this point, I'm still focused on 191.80 into 192.24. This region right here, the stretch highs of the year, and this is a 38.2 from the 2007 decline, if I'm not mistaken. 2008 decline. And that's sort of the next objective target to the upside. So that's something I'd like to see if the sterling finally makes a move. If you're talking about the current trades, meaning the long euro positioning, let's see what that looks like in your term. Yeah, so Jamie's next topside target, I know he's looking at 26.15, and I have that same exact level. It's the 100% extension. I don't think anything changes on this, Nikki, unless you break below 125. So even if this thing pulls back, look for support at 125. A move sub 125 would probably have me out of that trade in your term, but that's the bullish invalidation level heading deeper into this week. The sterling Oz short on the intraday. On sterling Oz short on the intraday makes sense to me only if you're taking it against 91.67 for an intraday trade. Okay. If the range holds, look for a play, and again, right into the median line for the week, right at 90.60, and then right back at. I'd be looking to 190. Wouldn't be looking much deeper below there. But for conviction on short scalps, you need to see the move back below 190. So again, that's a type of swing trade where the intraday is a little bit different, right? Because he's looking to get short near 91, which we did just rally into. His stop is at 91.80, and that's right against the highs. So that's a type of swing trade where intraday, I would have actually taken a long scalp with a break right there into his invalidation level. So guys, do you understand what I'm saying? You can use the website for a lot more than just, let me just take, Jamie's levels and plug them in. Let me just take Mike's levels and scalp the intraday. You could take a lot more out of the service than just that, guys. So for the swing trade like this, yeah, he's looking for entry up there, but there's no reason for an intraday guy like me that I can't actually play the long into that region. Does that make sense? Right, Nikki, he's short against 91, but his stop's still above the high. His stop is 91.80. So for me, again, even if that trade is in intraday, I could still take this long into that 91.67 level. The only concern I have about trying to short this is the momentum signature. And I've actually told, I think we looked at this yesterday in the scalp webinar with this rebound, taking us right through the defense of 40 and then right through 50 again. For me, has me still really cautious about trying to press the short. And actually, an overnight trade, Nikki, we did the same exact thing. Came right into 40 and it held, and they broke 50 again. So these are typically things that you see in uptrends. And certainly in this pair, you've been seeing it since that low that we made early last week. Every pullback, hold at 40, still looking higher. 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 Now for this, again, because the opening range for the week is so clean, that's why I would have been comfortable, let's say, taking this long. Longs into 91.67, 91.84 are at risk, and this is where you would want to see this thing hold if that downside play is going to work out. Hope that offers some clarity on that one, Nikki. It says, yeah, I got you. Thanks. More than welcome. Okay. I think I got all your questions. And he's also looking for a dollar yen, by the way. Dollar yen short from 118.50. Again, I think near term, we want to be focused on levels just ahead of that, like I said, on the intraday chart. I want to be focused on 117. And then, like I said, I think this is going to be pretty big right ahead of 118. And that's going to be that trend line resistance confluence with that 38.2. So if you get the stretch into 118.50, that's where he's looking to press the short. For me, I'd be interested in a long through this, actually, if we get through this region of resistance near term. That being said, below here, objectively, your weekly bias is bearish. So hope that offers some clarity on those setups. Guys, we'll go ahead and wrap things up here. Again, we'll be back on Thursday with Jamie, who will be manning the feed here for his intraday or his timing midweek strategy updates. Guys, feel free to give us your feedback. We do want to know your thoughts, what you want to see, what you don't want to see, things you like, things you don't like. Feel free at all times to email us at info@sbtradedesk.com. Chintan says, off for the session here. That's all the answers I needed, Mike. Cheers. Hey, Chintan, you're more than welcome. Guys, again, best of luck trading. Watch the FOMC interest rate decision tomorrow. I'll try to keep you guys updated as far as the Twitter handle with what we're doing. Use some caution, and there's likely to be a lot of chop. Remember, it's not your run-of-the-mill interest rate decision. Okay, we're going to get those quarterly projections. We're going to see the dot plots. We're going to get to see the presser with Janet Yellen. So there's going to be a lot to sort of digest. We'll want to comb through that data before we start to make any major assumptions with the dollar, specifically on the breakback below 11,400 that we made on the index. Till then, guys, best of luck trading, and we will see you on Thursday. Cheers.